All right, welcome back, traders. You're all welcome back to my videos. This is Sammy Forex, and if today is the very first time you're watching my videos on YouTube, and at the end of the day you find this video very useful, do it to subscribe. Okay, like this video so it can be recommended to as many traders who may need this knowledge. So in this video, I want to be showing you guys, teaching you guys how you can manage your risks very well, and I pray I go deep into it so you guys will understand everything. All right. So I wouldn't want to waste any of our time. I also talk a little on how you can approach news events whenever you want to trade news in the market. Okay, so but then the main topic for this very video is how to manage your risks in trading. So I promised you guys in my trading group that I was going to host a Zoom meeting, of which I did, but for some reasons and location and internet problems, most of you could not join. Okay, so I had to record this video and then make sure everyone is being carried along. And you watching the video for the first time and you view my channel for the very first time and you want to join our trading group, okay, it's on whatsapp. You can find a link to my trading to the group in the description below. Okay, so I wouldn't want to be wasting any of our time. This is the group, Sammy Forex. Okay, when they come in here we share signals, we also we teach and share ideas within ourselves, okay, on how to trade the forex market. All right, so the link is in description below, and also a link to my broker I used to trade is also in the link below. So let's go down into today's business and without wasting any of our time. So what is risk management? This applies to how much you're willing to risk in the market, okay, compared to how much you want to gain. Okay, basically it's a very important topic when it comes to trading, because this is where you tend to manage the money you've deposited into your trading account. Okay, so it all starts from the very beginning. It all starts from you knowing uh exactly what you can afford to risk. Okay, it starts from you knowing exactly what you can afford to risk. So it all starts from you um understanding the fact that you're dealing or doing a business in this forex market. Many of you are still having a mentality of gambling, okay, getting rich over the night when trading, which is not so. You deposit $100 in your account and you want to take it up to 500 to $1,000 in just a week. The chances of that happening is very small. Okay, you may end up losing the entire money, even though you succeed in doing it the first time. That is way even more disastrous, because you will start thinking it is very possible for you to do that. And you go and carry your entire life saving and your parents' money to come and start doing nonsense. Okay, so it starts from you understanding that this is a business. And when you understand that this is a business, you will tend to think in a long term and not a short term. Now, the short term trader always look out for his very present trade, by emotion on how the present trade outcome is, maybe a losing trade or a winning trade that he or she had today. A short-term trader will allow that get into him or her. Okay, but a long-term trader who is thinking, how will my next 50 to 100 trade be like? All right, that is thinking in a long term. Meanwhile, I would love to give credit to whom honor is due. Jeffrey Benson, shout out to you out there. He's my mentor. Even though I've not met him in person, but his personality is really doing me a lot of good. And I know one day, one day he will hear this, and I believe he's gonna be proud as he is helping someone out there. Okay, so you have to think long term. Okay, thinking long term means whenever you deposit your money in the forex market, let's say you deposited $1,000 into this market, all right, $1,000 into the market, into your broker account. Now think long term. I always tell my students, divide your capital, let's say $1,000, divide it by your next 100 trades. Okay, what do you have? $10. And what percentage is $10 when it comes to $1,000? That is about 10%. Am I correct? Let's make the calculation. $1,000 divided by 100 is equal to, all right, times 10. All right, that is about 1% of $1,000, because 10% is $100. All right, so $10 is 1% of your $1,000. So now you're dividing 1,000 by 100 to give you 10, isn't it? Which is 1% of $1,000. That means it will take you approximately 100 trades for you to lose $10. Do you understand me? This means that if you are able to read, this is the amount you should be risking per trade. This is the amount you should be risking per trade, guys. Now, if you're risking this one, that means it will take you approximately 100 trades to be able to blow your account. That is the 100 trade you're not winning anyone, you're losing all of them back to back, which is very, 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 very. I've not heard that of. I've not heard of that before. Okay, all my time of trading, I've not heard that somebody had lost his 100 times without winning anyone back to back. It's not going to happen. All right. So the chances of you blowing your $1,000 account for the next 100, let's say you're a day trader who trades every day, for the next 100 days is very, very slim. At the end of the day, you see yourself spending months, years in this market with that small $1,000, because why? You're very good at managing risk. So if you divide your capital, thinking long term and dividing your capital by okay, let's say $50. Now this is relatively small, all right. Okay, now let me use amount that is easily disposable by many of you out there. So you have $50. Now how many trades should you possibly take out of this $50? All right, let's assume you divided it by 20. All right, this is 2.5. Okay, so about 5% of $50. This is it. So any trade you want to take and stop loss, it must give you equal to $2.5 if it goes against you. So I will show you right now how you can calculate all this and know when where to place your stop loss, that if the market doesn't go against you, you will lose $2.5. So approximately it will take you 20 trades to be able to blow your $50 account. Have you seen where risk management is very, very essential? And it's very, very, the chance of you losing 20 trades without winning anyone is very slim, even as a beginner who is gambling. Okay, so that is why I say think long term. So what have I just said now? If you have any money in your account, divide that by the next 10, 20. The least you should divide is 10. That means you have to lose 10 trade back to back on that small account, no matter how small, for you to blow the account. Otherwise, if you have from $50 upward, start dividing by 20. All right, $100 divided by 20, $1,000 divided by 100. Okay, now if you divide $1,000 by 100, I believe you understand it better. By 100 trades, this means these are the trades, this is the account amount you have, equals, so that means every trade you take any day risks $10 to make 20 and above. That means it should take you 100 trades to lose $1,000. Now that takes me to where you can easily calculate all this without having to stress yourself. Now we have several websites. We have myfxbook.com, where you can find position size calculator. All right, we have fire pips out there. Okay, I love this very one. Love this one very well because it has all the currencies you may need. It has the naira as well, so in case of those of you who have naira account. Okay, so let's go. Now let's assume how, or if you want the links to this, you already have them here. Myfxbook.com. This one is firepipsfx.com and all that. So you just go to the website. Even the FTA mode, they have a calculator there as well. So what am I saying? Whenever you get a setup, let's say you have a setup on GBP USD. I love trading GBP USD, and that's because of my mentor Jeffrey Benson. I love that guy very much. Now, you have your account size to be 1,000. Remember, we are working on $1,000 right now. You're working on $1,000, and let's assume you're a good trader, you're a one who wants to practice this management very well. You've divided by it by my advice of 100 trades is equals to, you want to be risking $10. Okay, now they're asking you your account size is what? 100 $1,000 rather. Okay, now the risk ratio here is what, guys? 1%. And then the stop loss at this point, let's assume the trade you want to take is 15 pips stop loss or 20 pips stop loss. Let's say 20 pips. All right, number of trade, let's say 1. All right, then hit your calculated button. Okay, now you are asked to take, all right, can we see that even the 1% is about $100, so this should be 0.5. 0.5. No, I made a mistake here. This I'm correct, so I have to take off 10 here and then calculate. So I have to take out 10 here and then run the calculation. So $1,000, like you say that you've already divided it by 100, and you want to know how many pips or the lot size to use in particular, that um if the market goes against you 20 pips, you will still lose $10. Okay, so you have imputed your $1,000. You have the risk ratio to be 1% of $1,000. You have the stop loss in 20 pips. Trade size this. All right. So even if you want to take 5 trade, you just write 5 trade. All right, and then you hit your calculate button. Now, what they are basically telling you, remember you had 5 trades here. That means you want to open 5 different positions on this very currency pair. Okay, what they are telling you here is risk 0.01 lots, use 0.01 lots and open times this 5 trade. All right, and then if all of them still goes against you with a 20 pip stop loss, you still lose $10. Now let's assume you want to take just one trade. Calculate. Now they are telling you here to use 0.05, and if it goes against you 20 pips, the market goes against you 20 pips, you will still lose $10 out of your $100. So now, as a trader who is losing $10 out of $100, that emotions won't be there. It's like losing 10, it's like losing nothing. Do you understand? It's like losing nothing basically in this market. So the emotions will not be there. You won't feel anything. Okay, so that, remember, the risk management aspect is what will help you deal with your emotions. It's very, very wrong as a trader to get into the market with so much emotions. Okay, whether positive or negative, based on the outcome of your trade. All right, so you, as a trader, you have to be in a very balanced state of mind before you get into any market to trade. Okay, don't get into the market when you're too anxious or too happy for that day. Don't get into the market when you're too depressed, based on whatever circumstances may have come across your day. So be in a balanced state of mind before getting into the market to trade. So now, have you seen that for a 20 pip stop loss, if you're using 0.05 and it goes against you, you're gonna be making 10. You're gonna be losing $10 out of your $1,000. Now continue like this. It will take you approximately it will take you exactly 100 trade for you to blow this entire money. And even as a complete beginner, that chances is not there. There are some trades you start, you make small money and you also win some trade. Okay, now the question is, if you're risking $10, how much should you gain? The answer is very, very simple. You're risking $10, you should target 2 times your risk. Always target 2 times your risk. Always target 2 times your risk. You are permitted to target 3, you are permitted to target and above, but the least you should target is 2 times your risk. People ask me, what about 1:1? I don't buy that idea. All right, because you don't want to be buying something at a particular amount and selling it at that very amount in the market. So you're risking 1 to make 2 and 3 and above if possible. All right, so but the least you should target as a beginner is 1:2. Okay, so the market easily travels your direction and give you what you want and you're out. So this is it for risk management, guys. This is it. Remember, it starts from the very beginning. Understand yourself. Think long term and not short term. All right, get rid of that getting rich quick mentality. Don't get yourself too attached to people's results on the internet. Most of those results are not real. Focus on yourself and build yourself. That is the best way to grow. Okay, get yourself a particular mentor that you like, that you love very well, and then stick to whatever is teaching you. And then also, your mentor has 30% of the job to do in your life. You as an individual, you have 70% of the entire work. You develop yourself. So no matter what your mentor tells you, you have to have a personal discovery about the market. That is the only thing that can take you very far. Okay, so that is that about this. Now, like I was making a quick recap. You have to understand, think long term. Okay, once you've thought a long term, divide your capital depending on how much you have. But at least you should divide your capital is 10 trade. Okay, which means you take approximately 10 trade for you to lose your capital without winning anyone. Otherwise, from $50 and above, divide it by 20. From $1,000 above, divide them, or from $500 and above, divide it by 100 trade, which means it will take you approximately 100 trade for you to blow your account. Let's have a $500 account, for example. $500 divided by 100 is equals to 5. So every trade you take, you should risk $5 to make $10. That way, you will not only stay long in the market, but you get so familiar and comfortable with your strategy that is keeping you going. Okay, you will learn so many things before you eventually be pushed out of it. But when you start risking too much in the market, maybe you have no idea of what I'm talking about, and you get into a trade and you're losing out of $500, you're losing $200 on a particular trade. Okay, the probability of you getting getting your mind scattered is there. All right, and at that point you are being doomed, because once these market makers succeed in making you so emotional in the market, they have caught your they have caught you off guard. All right, so you don't want that to to happen to you. All right, so at the end of the day, you will eventually blow that money, because you have just two moves to go, because you've lost $200 now. Let's see where risk management comes in. You've lost $200 out of a $500 account, minus 500. You have $300 left. Now, at that point, see what most traders do, because they use a bigger loss that eventually cost them $200 in the market. Now, on the next trade, they are falling down to risking just $50, because they are scared they don't want to lose another $200. And now probably this $50 goes in their favor and they are getting $100 in return. Have you seen that? You're messing the entire thing up. So everything starts from the beginning. Make sure you start risking small. Your strategy gives you progress in future. You can continue increasing your risk, but start small. Start small. All right. So no matter what you do in the market, guys, no matter what you do, make sure you try your very possible best not to be caught off guard by the market makers emotionally, because the moment they catch you off guard emotionally, they succeed in getting you emotional in your trading decisions. That is the beginning of the entire downfall for that very account you're owning. Okay, so make sure no matter what you do, you're not caught off guard. Now we are humans. I wouldn't say me who is talking to you, I don't get emotional at some point, but know when to stop getting emotional. Now, the very thing that will help you in not getting emotional for too long is risking what you can afford to lose. There are people out there, guys, who are comfortable losing their entire money. That's because they have another sort of income that will get them money to fund their account. But you who uses your hard-earned money, whose source of income is not there anymore to fund your account, any moment from that period you're losing it, you don't have to get this getting rich mentality into your head too much. Or everybody wants money, but if you focus on the money, you won't get it. Focus on doing the right thing and money would eventually come to you. If you notice me, I've not talked on how much you will gain, every trade. I've ever since been talking on risks, how much you will lose, Why am I doing that? Because that is the only money that is yours. The profit you make out of a trade is the reward you get for being disciplined at the end of the day. But that very money which is your stop loss is your money. That one is what you will protect by all cost. So the only way I was talking about that you will not get caught off guard by the market makers getting you into emotion is you risking what you can afford to lose. Like the calculation we use where you divide your trade by 100, all right, and you're risking $10. You're losing $10 out of $1,000 account minus $10. You still have $990. That will not get you emotional, even though you are emotional that very minute you lost this money. But then give yourself that very day, even in the next 30 minutes, you forget about that $10 because it's gonna be nothing compared to what is left in your account. So that is one of the key ways you will avoid getting emotional. Because if you succeed getting emotional, that is the market makers. They get you emotional, emotionally driven to make decisions in the market. That is you're just finished, guys. So your sole aim is not to become emotional to a point where it affects your next trade. All right, and where it all starts from is you risking what you can afford to comfortably lose. Guys, I'm stressing this enough because I want you to get it into your head. The foreign market is not where you play around. And in case you've not gotten good knowledge on the market, get yourself a mentor. Okay? I don't want to talk deeply into getting yourself a mentor and all that. That is solely on you. But if you're really serious about making money or making a living out of this trading of a thing, you must get yourself a mentor. All right? Otherwise, you will learn the hard way. Okay, that money you're scared of giving to your mentor, you will give it to the market, and no, you won't hold anybody ransom for that. But when you going to your mentor and giving him or her more, the fee he's asking you to train him and all that, any knowledge you lack in the market, you will turn to that person. But once you fail to do that, you come thinking you've known everything, blah blah blah. You want to teach yourself. Then YouTube, everything are there, but trust me, you still pay that money you're getting scared of paying to somebody. All right, in one way or the other. So get yourself a proper mentor that would help you shorten the entire journey of this trading of a thing. Okay, because he's there to tell you where to get in and what to do and what not to do. But if you don't have these people around you, then you will learn the hard way. Everything you're supposed to be told not to do, you see them the hard way and you want to learn by yourself. And one thing about the market, it will teach you one lesson until you get to learn it. All right, you won't graduate from that very lesson if you don't learn it. That very lesson will cost you almost, will always cost you money until you learn it. That's one thing about the market. So I'm not putting fear into your body, but then I'm letting you know how important risk management is. You want to do it on your own, good and fine. Most people are doing it on their own. All right, before I met my mentor Jeff Robertson, I've already been doing this thing on my own, showing me some things I really lacked, even though I've not met him in person, but connectivity is there. All right, so that is that. Most of you don't have the ability to learn on your own. You really need somebody. All right, it might be anybody, but get yourself somebody who has the same personality with you, and then make sure you beg that person to mentor you. Now start from what you can afford to lose. Always don't ever try to use a bigger lot size that your account size can't carry, because if you do, you have to continue that way. Assuming the calculation we made on $500, that you went and used a loss that cost you $200, and you're having $300. Remember, you have to continue this way on your next trade by risking another $200, and pray you make it count, so that you make $400 and try to cover up. Otherwise, if it goes wrong, that means you have $100, and that account is gone already, because you have to continue making risking $200, except you want to take a longer process of going back to $50 and start from there and start making profit 1 to 2 and all that before you start balancing up to $500. Otherwise, if you do this very approach market this very way, know that that is the end point. But then if you start small, like what I told you, even though you want to divide $500 by 50 trades, your next 50 trade, which is still very good, you don't want to be risking $10, fine, it's still good. It will take you approximately 50 trades to blow up a $50 account, $500 account, which is still not very possible for someone who has an edge. Now remember guys, this video is for solely beginners, and if you're still uh feeling your and it at the intermediate middle, or you know what to do, but you're still struggling in this risk management routine, then this video is for you. But then I assume you don't have an edge and you want to start everything. That's why I'm telling you, divide your capital by so amount that I'm saying in this video. So with this guys, you can tackle emotional aspect of trading with these guys, because the only thing that can get you emotional is when you start losing that small money. Yeah, when you're winning and winning and winning, there's no emotions in there. It's like demo. All right, so once you're winning and winning, there won't be emotion. You start feeling like you're god in this market. But once you start losing, emotions will come there. So the only way to tackle emotions is risking what you can afford to lose. All right, so that way you are good to go. So guys, I believe this video is useful, and you find it helpful as well. As usual, always do well to join us on WhatsApp. uh Sammy Forex, do well to join us here. We are not much, it's just small community of guys who we just come together, and then you see we share signals. We also trade news. I said I was going to talk little about the news, but I've already consumed my entire time talking on risk management because it's very very essential. So if you want to know how to trade news, I don't do buy or sell on this news of a thing. I tell you straight where the market should go. There was this time I said the news should come out negative against the USD pair, blah blah blah. Pairs like USD, AD USD, we buy pairs like USD CHF. And as I said it, I went to my account and I took the exact trade and the exact way I predicted them. I did not do buy stop or sell stop. I don't do that. All right. If my setup doesn't tell me buy at this point or sell at this point, I won't do that. So I'm not there to gamble the news. I trade the news normal. All right. So if you want to know, because my next video will be on strictly how to trade news. If you want to get that video, do it to subscribe right now and then join my trading channel on trading group on WhatsApp. We share both losses and winners, so we are not here to hide anything from you. So that is that regarding risk management. So I believe you watched this video and you found value in it. Do well to like the smash the like button below, and then subscribe to this channel so you can be getting educational videos like this. Also forget the links below to my trading group and other necessary group that you may find interesting. So thank you very much guys for your time. All right, and I wish you guys a very successful trading journey. All right, especially the beginners. All right, we are all also aiming to get to a particular level. Until then, we all are still learners. All right, until then, we all are still learners, including me who is talking to you. So you out there, do well to learn and teach yourself very well. This is a career part that is very essential. Okay, many of you go to school to study medicine and all that for how many years? But then this very part beats all those ones you're going to school to study. This career beats all of them hands down, because the end point of whatever you're doing in school is to make money. And here you are in front of money. So I don't see any reason why you will not put your head down and study this thing. Alright, if people can do it, you can do it. They don't have two heads. Alright, so this is what I have to tell you. Whatever you're doing in school, whatever you're doing out there, know that this part is greater than that, them all. So if you're here, you should focus. Also, as much as you're focusing outside there, focus here as well, because it will change your entire life and that of your family. All right, so thank you very much guys for watching my videos, and I love you all. Bye.